Greetings guys, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was September 15th, 2009, about halfway through this month of September. Now we are in a Tuesday here today. Of course, we had Bernanke speaking this morning, Obama speaking this morning, lots of distractions towards the end of our morning, but we're able to get our day off to a pretty good start. Now, as you guys know, we're seeing a lot more volume this week, so we're very optimistic here going into the rest of this month. Before we talk about the trades we took today, I want to remind you guys about our free resource online. Go to our YouTube page /School of Trade. Would encourage you guys to subscribe to our YouTube page and please rate and comment on this video. Let's keep tabs on our trade room totals. Now, of course, trading 4 contracts. Today's total was $180. That brings our weekly total to $580 and our monthly total to $1390. So we, of course, now have made more money in September than we did in the entire month of August, and we've only been halfway through the month of September so far. We gave back a little bit of money. We were up about 220 and change until the last of the day. And, of course, I'll go over it with you guys here in just a second. But $180 was our final today. Went 2 for 4, $180. Weekly total $580 and $1390 for a monthly total. We'll keep you guys posted. Our term of the day is swing high, swing low. Now, this is, of course, a very important topic for us James Wave traders. We use these techniques every day in our live trade room. And, of course, what is a swing high and a swing low? Well, it's the technical analysis of price action on our charts. First of all, swing highs and swing lows, these are technical price patterns. Now, a swing high is a peak in price movement that exceeds a recent high. A swing low would be a low in price movement that exceeds a recent low level. Okay, so a swing high is when, of course, we break above a recent high. A swing low is when we go break below a recent low. Now, consecutively, if we see swing highs all line up back to back to back, they will signal the start of a trend. So if we see swing highs consistently in the market, we, of course, are looking for an uptrend. If we see swing lows consistently in the market, we're looking for a short trend. Now, of course, if we don't see any at all, that's going to identify a sideways market or horizontal price action. So if we don't have any swing highs or swing lows, we're seeing double tops, double bottoms, we're not seeing any new highs or new lows, that, of course, identifies a sideways market. We use these swing highs and swing lows to identify levels of support and resistance. A swing high above us is a level of resistance. If we break above that swing high then becomes a level of support. And of course, the same is true for the opposite. If we break below a swing low to the downside, that level of support then becomes resistance. So we use these swing highs and swing lows as support and resistance levels. And of course, we use them throughout the entire day for our entries, for our stops, for our targets. Swing highs and swing lows are very important targets we can use as support and resistance. And of course, that's going to help us on any time frame, any setup, any market, guys. They all matter. Okay, so pay attention to those swing highs and those swing lows. Now let's look at what a couple of them look like. As you can see here on the left, the swing high, of course, once again, breaking above a recent high. So you can see price moving up, creating those swing highs. On the opposite side, there to the right side, of course, you'll see your swing low. As price breaks new lower lows, it creates a swing low. Now, how do we use these swing highs and swing lows? Well, let's pretend we're going to be looking to take, in this case, this would be for a breaker setup. Now, for your swing highs on the left side, our long entry would be taken above the most recent swing high, and the long stop is placed below the most recent swing low. On the opposite side, if we're taking a short trade, our short entry is the break below a swing low, and of course, you can place your initial stop a couple ticks above the most recent swing high. So you can see how we can use these technical analysis patterns, right? These technical patterns in price, whether it be swing highs or swing lows, to not only get into a trade, but to also manage our trade, in this example, with a protective stop. Now, guys, we have a technical indicator. It's a proprietary indicator that we offer to all of our lifetime members, and we call it the swing indicator. Now, the swing indicator, just as you guys can probably imagine, it marks up our swing highs and our swing lows for us automatically. You can see it referenced in these light blue lines here on this price chart. Now, this chart of the gold, you can see, of course, we have swing highs and swing lows, and we're going to use those levels as major levels of support and resistance to make educated trading decisions. So, of course, you can use special indicators like this proprietary indicator we offer to our members called the swing indicator. Comes with our lifetime membership. So, guys, come out and join us tomorrow morning. When you do, if this is your first time with us, please pick up a copy of the beginner's course. The beginner's course is designed to be a firm foundation of knowledge for you to build on as you learn our methodologies, our patterns, and of course become a lifetime advanced member. Now, we open the room at 2:45 a.m. Eastern Standard Time, and it's available for everybody, trial members and lifetime members. We'll trade the European session at 3 a.m. Eastern Time. We'll trade the U.S. pre-market at 8 a.m. and, of course, the U.S. Open at 9:30. And we'll usually finish up, once we're done finishing up questions and going back over scenarios, we're usually done about 12:30, 12:45. Now, of course, we'll show you guys live in real time how we follow 3 very simple jobs, and that is to identify, adjust, and then execute. Always following those specific mechanical rules, using patience and discipline to wait for only the very best setups. Let's talk about some of the trades we took today. Now, here in the DAX, now finally we got some volume back in the DAX. Actually got some moves back in the DAX this morning, and as you guys know, we love it when we see that. The DAX being one of our favorite markets to trade, it's got a high cost per point, which means we make lots of money when we trade it well. Here in the DAX, I wanted to show you guys an example. This is, of course, a live snapshot of what it looked like this morning in the market. And this example, of course, at 3:54 this morning, just after 3:50, just before 4 o'clock, I should say, on the DAX, this is a 2-step long. Now, again, a 2-step long is a counter trend trade pattern going against a short-term trend. Entry here was at 56.12 even, and we took our first target of 4 ticks, took 2 contracts off the table, right, half our position off at the first target. We moved our stop up to our point of entry, and we got stopped out at our point of entry. So we took 8 ticks out of the market, and of course, at $35 per point, right, that's 4 points. There's your $140. So you can see a very small winning trade in the DAX, and it makes us tremendous amounts of money. So that's why, of course, we like this market so much. Now, this is what I really want to show you guys here is if you follow this to the left-hand corner, again, using our pace of the tape indicator. Now, this pace of the tape indicator, again, is a proprietary indicator for our School of Trade members. Its easiest description is it's a speedometer of the time and sales window. Now, the increasing pace of the tape, this is what confirmed that entry. As you can see, we're seeing red pace of the tape bars, which means that we are below our normal threshold for taking our trades, which means price action was a little bit slow at that time. However, when we have a 2-step pattern setting up with increasing speed of the tape, that, of course, is going to give us that much needed confidence we need to get into that trade. And here, just before 4 o'clock this morning, Eastern Standard Time, right when we opened up at 12 even there, get our 8 ticks based upon this pattern that we see on our pace of the tape. And of course, that was what we needed to confirm our point of entry. That was our first winner there on the DAX. So 8 ticks there on the DAX. We didn't take any more trades there in the early morning session, right? The pre-market session, the European session. We had to wait, of course, until about 9 o'clock here on the crude. Now, we took a break from about 5:30 to about 8 o'clock this morning when price action slowed down. So make sure you guys, if you come out and join us tomorrow morning in our trade room, be aware that we do take breaks, usually between 6 and 8, when it becomes pretty slow here in the market, Eastern Standard Time. Now, back to our crude chart here. 9 o'clock this morning, 2 minutes past the hour of 9 o'clock on the crude. This was a breaker pattern to the short side. Entry here was at 69.30. Now, this one, of course, we took another 4-tick winner. Took 2 contracts off at 4 ticks, got another 8 ticks in our pocket. That, of course, at $10 a tick, right, much smaller than the DAX, that brings $80. So with your 140, now we're up to 220 in the day. And of course, looking for our last final trade of the morning here, it was a small loss, 10.59 this morning on crude, so just shy of 11 o'clock. Now, at this point in the market, I had just finished congratulating one of our members for having his largest live trading day of his career. And I just finished telling him about how now is not the time to be risking your money in the market because we had Obama speaking right after we had Mr. Bernanke speaking at 10 o'clock. So we had a Fed Chairman Bernanke at 10 o'clock, then President Obama stepped in at 11 o'clock. And of course, I should have followed my own advice because I got in on this last trade just before 11 o'clock, breaker long, 69.35, and of course, took an early exit in this one. Got out minus 1 tick on my entry, of course, times 4 contracts. That's a negative 4 ticks times $10 a tick is going to be $40. So we took our 22 ticks now down to 18 ticks, obviously, which of course is now going to bring us to $180 in the market. That's where we ended up on the day. But this, of course, being a breaker long, this early exit, what I looked for on this early exit was 2 things. I looked for the speed of the tape slowing down. I looked for momentum curling against me. If you look down the bottom here on this chart, all the way at the bottom there, you'll see the momentum was curling against me at that time. So with momentum curling against me, price action slowing down, and knowing that we had Obama getting ready to speak, it was a pretty easy decision to get out of that trade a little bit early. As you can see, it would have worked out, but boy, it was very difficult to make the decision. Of course, as you guys know, we can only make the decision in real time. We don't have the luxury of knowing where it's going to go. I have to follow my specific rules, and they told me, when you see price action stop, if certain things line up against you, you got to get out of that trade. Once again, guys, my name is Joseph James. I want to thank you guys for your time today. Please take a moment to rate and comment on this video. Come out and join us tomorrow morning live in real time at 2:45 a.m. Eastern Time, or come out and join us at 8 a.m. Eastern Time for the U.S. pre-market. Guys, I want to remind you to drop us an email, sales@schooloftrade.com, for more information about lifetime membership. And as always, hope the video helps. This is Joseph James. We'll see you guys tomorrow in the room. Bye-bye for now.